Although the market sold off today, they didn't represent a reversal of a trend for a couple reasons. In the NASDAQ, we had a very strong buy signal just a few days ago, that island reversal, a gap up from a doji through the T line, and we're still above the T line. So although we sold off today, that could be considered merely just profit taking versus a reversal, because stochastics were still heading up and we were still above the T line and we're coming off of a strong candlestick signal. The only criteria that we'd be watching for is if they close it below the T line and or the 50-day moving average. That would tell us that maybe the steam has gone out of the trend. Additionally, although the NASDAQ sold off, the Dow closed right up about where it opened, so it really didn't trade off that hard. So we're not really seeing any indications that there's been any mass selling coming into the market. And candlestick analysis still provides benefits such as recognizing candlestick patterns like the fry pan bottom that held up well even with the market trading off most of the day because it was doing a fry pan bottom, a very slow rounding pattern that eventually breaks out to the upside. Or coming off of buy signals, such as this flutter kicker signal seen in the AMRN chart with a gap up. That's very strong power coming into the next trend, so that we can look at a chart and say, here's trend 1, here's trend 2, starting trend 3, which would be equivalent or stronger than trend 1. So even though the markets aren't trading positive, the chart patterns that we recognize from candlestick analysis still puts us in positions where the probabilities are in our favor that the trend is going to continue despite what the market in general is doing. That'll be it. We'll see you in the chat rooms.